No, we're live. Oh,
We're
we're live.
live.
Okay, for anybody that is watching here, I've just said to Bex, how do we know that we're live? Because this is the first time I've done this. So for those of you that don't know me, my name's Sarah Harkness. I am the Managing Director of an accountancy. We're an accountancy firm, believe it or not, based in Stockport in the northwest of England. So this is the first time I've done one of these. I do quite a lot on YouTube, and Bex has challenged me to start doing more lives and get more interactive with the audience, because we get tons and tons of questions through, and we wanted to give you an opportunity to ask some of those questions for us to answer those live. So we do have lots of questions we're going to cover. I'm going to hand over to Bex in a moment to introduce herself. And actually, it was only about 15 minutes ago that I asked her would she come on and actually ask me the questions that we've had sent in advance, because, well, I just thought it'd be easier that way. So Bex, over to you. Can you introduce yourself, please?
Oh, thanks, Sarah. Yeah, and I'm honoured to be your first ever live guest. So yeah, I'm Bex from Social Media Executive, and I train businesses how to use social media, which is how I've ended up on the live stream with Sarah, because as she mentioned, I challenged her to start doing lives because she has a fantastic YouTube channel. So if you are watching this on YouTube, please do give it a like and subscribe to it, where there's loads of really valuable tips, which I regularly watch, all about tax and accounting as a sole trader or a limited company. So thanks for inviting me.
You're very welcome. I totally forgot to mention what the subject is today for today's talk. So if you've come through from LinkedIn or YouTube, you'll have seen that we're talking all about electric cars and the pros and cons of electric cars, and whether it's still worth getting an electric car through your business in 2022 now that the tax rates have increased. It used to be that we would always advise clients never to put a car through the limited company because the charges were just so high. It really took away any of the benefits. But now that electric vehicles attract much lower taxes, it's become much more beneficial to actually own a car in your company and work with them that way. But there are a lot of technical questions, I suppose, that go alongside that, whether that is about the benefits in kind, whether it's about other associated costs that you might not have thought about, like employers' national insurance contributions, about the reporting of that, about claiming allowances, about VAT, and about whether you should buy or whether you should lease a car. And I'm hoping that we've got one of our clients, Andy from CarSave Leasing, who's going to jump on either live or at least in the chat and answer a few questions later if anybody has specific questions about leasing a car. I can look at it from a tax point of view, but I'm not an expert on leasing. And for any of you that were listening to the news this morning, and again, there were lots more lead stories about how challenging it is to get an electric vehicle, or actually any new vehicle in the UK at the moment. I think already in the first half year, it said we're 100,000 cars less have been produced this year or sold this year in the UK than last year, and that's because of all of these supply chain issues. But I'm sure we can touch on that a little bit more later. So Bex, what sort of questions have we been getting through?
So yes, and then that's mad, isn't it? That the supply chain, and I'd heard that, and it's like, whoa. But yes, I've got some questions here that people have put in, because it is a bit of a minefield, isn't it? When you're a company or an owner, it's like what to do. And I know I was looking to buy a car a couple of years ago actually, and I thought about electric, but then I went ahead and got another car, but I didn't realise I hadn't been watching your live streams, Sarah, your YouTube videos. So I didn't do that, but you were doing YouTube videos, so I didn't actually know that actually electric vehicles could help. So I've got some questions here, and again, if people have got questions, put them in the chat, and also introduce yourselves so we know who's watching. We can say hello as well, because that's always really useful. But yeah, shall I go ahead with the first question then?
Yeah, please, fire away.
So one of the questions that was asked was, how much is the benefit in kind on my electric car, and how much tax will I pay? And I think, well, I wasn't quite sure what benefit in kind was either. So, what is benefit in kind in relation to when you're doing your accounts?
Okay, super. So you've started me off with something that thankfully I can answer. I should have said also, I'm hoping that I can't see who's on the call at this stage, but I'm hoping we've got Catherine from my office, who's my tax manager, who didn't want to come on live with me, although I'll get her sometime. But Catherine is on hand behind the scenes to answer anything that gets a little bit too technical. Because
on the chat.
Yes, on the chat, because as you know, I'm not a tax advisor, but she is. So what's benefit in kind? So first of all, basically, a benefit in kind is the tax that an employee pays, I suppose, on anything that the company buys from an employee that is considered a benefit. So, for example, oh, Catherine's just said hello. That's good to see that she's online. But so, for example, if your business pays for something that is not wholly and exclusively for business use for you, such as gym memberships or private medical or other healthcare benefits or a company car, for example, that would be considered a benefit in kind. So the benefit in kind are calculated in various different ways, but it's a percentage tax charge on the value of that benefit. So for 2022 and 2023, the benefit in kind for fully electric cars is 2% of the list price. Now, when you compare that to, and I'm going to ask Catherine in the chat just to type in what an average might be for regular petrol or diesel cars, but it can go up to 18% potentially of the list value of the car. So that's a huge tax charge. And it's not just the benefit in kind. And actually, she's already given me that answer. It depends. It varies to about 14% in hybrid cars if they have very low range, so of electric miles. But hybrid cars are generally charged benefit in kind rates similar to the petrol or diesel version of that car. Does that make sense?
This is why we need you in our lives, Sarah, because it sounds quite simple, but actually it's really quite complicated, isn't it?
There are benefit in kind calculators on HMRC, but also if you're looking at buying a car, most of the car traders will be able to, they'll have somewhere within the sales pitch, within the brochure for the car that says benefit in kind value is X. Or
that's useful.
Yeah. Oh, there we go. Catherine says for cars over 51 gallons per kilometer, it's 15%. So it could be up to 15% of the value of the car. So for example, if you were to buy a 50 grand Range Rover, you can't get a Range Rover for 50 grand. Let's make it 100 grand Range Rover because that's really easy for the maths. 15% of that's £15,000 charge. Whereas 2% on a Tesla at, even if it was 100 grand Tesla, it's £2,000. It's a massive, massive difference.
Yeah. So if you hover, Sarah, over Catherine's comment, you can actually pop the comment onto the screen so everyone can see it.
Ooh.
So there you go. And then to take it off, you just click back on. How cool. How cool is this? Technology. I can't do it actually as a guest into the stream. And then you can click it off when you like. So my next question then, how do I pay for my electric car benefit?
Well, again, that depends. Usually, and we've almost got to think of this separately as whether you're an employee of a company or a director of a company. So assuming that you are paid enough salary to cover the tax charge, that should be collected every single month through your pay-as-you-earn salary. So that'll all be processed by your payroll people, and that will come out of your salary. So you won't feel the hit quite so much. Whereas if you're a director of a limited company and you're on a tax efficient remuneration plan of a salary of sort of 10 to 12,000 per year, due to the new rates that Rishi put through not so long ago. So if you're on that split, then you won't have enough within your salary just to pay that tax, which means that you'll have to report it on a P11D form and pay that tax separately.
Okay.
Be caught up within your tax return.
And Catherine's just put, starts at 15% and can go up to 37%.
37%. So yeah, and it would be more like the 37% on one of those sort of higher value petrol guzzling or diesel guzzling cars that we all love to hate.
Yeah. So you mentioned P11D. Remind me, what is a P11D?
P11D just basically is a form on which an employer lists any expenses or benefits that are given to directors or employees, and that gets submitted to HMRC annually. And is it 6th or 7th of July, Catherine? I always get this wrong, but I think it's the 6th of July. It's got to be submitted to HMRC for the previous year end at 5th of April, but in this instance, 5th of April 2022. So those should all have been submitted earlier this month. And then the company also has a tax charge to pay on those benefits. So all of the benefits get added up. They've been deducted from employees' salaries. The employees shouldn't have anything else to pay, but the company needs to pay Class 1A national insurance contributions on all of those benefits that they have given to the employees. So there is a charge to the company as well.
Yeah. Okay. That's and a really good question. So Catherine says it's due on the 6th.
Yes.
Right. Great to have Catherine here. So, and this is a really good question, because what additional costs are there to the employer for providing an electric car to employees?
Okay, so that's one we just talked about. There's the employer's Class 1A national insurance contribution.
Right, okay.
Yeah, so no, that's all right. Class 1A national insurance contributions are employers' national insurance contributions. Now, they have been 13.8% for years and years and years, until our lovely Chancellor decided to put in this health and social care levy, which increased all of the national insurance contributions by 1.25%. So that's now 15.05% that employers must pay on the value of the benefits in kind. So again, it's quite a hefty charge. And for any employers listening, I can see Linda Lewis is there. Hi, Linda. You'll have noticed your pay-as-you-earn costs go up dramatically over the last year, because not only, as an output has the employees' national insurance contributions costs have gone up, but so have the employers' national insurance contributions. So it's quite a hefty charge that just can't be ignored.
Yeah. Right. So the next one.
You're going to get technical now, aren't you?
Well, I was thinking, what is just a simple one, actually, I think. What's the penalty from a late submission of P11Ds?
Oh, flip. Catherine? It's usually, I think it's the same as the personal tax return. So it's £100 penalty if it's submitted late. But again, if it's paid late, interest accrues. So the payments have to be made in line with in line with pay-as-you-earn payments. So I think once you've submitted on the 6th of July, the payments need to be made by the 19th of July if you're old-fashioned by check, or cleared funds within HMRC's account by the 22nd of July. So if you don't get the monies paid over to HMRC by that date, they start charging interest, which I think is at about 2.75%, and it's calculated daily. So every single time you're late, it goes up. Catherine, again, I'm gonna share this. Catherine, you're a superstar. Thank you for being on here. It is £100. It is £100 per month until forms are submitted. Wow. So it's really, really important to get things done on time. And those fines can be huge. And there are lots of little things to consider around this. If you have an employee that leaves your employment throughout the year, you as the employer are still responsible to submit the P11D for the time that they were with you. So for example, if somebody is employed by you for 6 months and then they leave, they've gone on to somebody else, they're no longer in your payroll, you think you've got nothing more, no more responsibilities because you've handed everything over. Actually, after the April of the following year, even if they left 11 months previously, you're still required as an employer to submit the P11D for the time they were with you.
That's interesting. And if you forget, you get fined £100 a month.
There you go. So it's
that's mad, isn't it? Okay.
Yeah. But P11D, just last thing on P11Ds, they are being phased out to a certain extent by HMRC at the moment. So they have just recently withdrawn the capability of filing. They've always been paper returns in the past, so they've withdrawn that capability, and they're forcing everybody, like in every area, down the digital tax route. So the reporting can only be done online at the moment, and it is likely that they're going to potentially withdraw P11Ds altogether and look at payrolling benefits. So we've started gradually to move some of our clients over to payrolling the benefits and making sure that that tax is paid every month rather than at a one-off chunk at the end of the year. So it can be a little bit complex to make that happen. It's got to be done prior to the start of the payroll year, which starts on the 6th of April each year. But once it's done, it then keeps everything nice from a cash flow and a submission perspective as well.
And it sounds like a bit like less paperwork to me. Once
it's set up and rolling properly, yes. Yeah, it's one less deadline to think about. But back to electric cars.
Back to electric cars. Now, the burning question as an employee, I think, if you've got an electric car, what can they claim per mileage?
Right. So if it is a company car, it's different as to if you have a car that, if you have an electric car that you use for business purposes and you're claiming mileage allowance, you can claim up to 45 pence per mile. So even though it's an electric car and the mileage costs are, obviously much lower than petrol at the minute, although electricity and petrol are both sky high at present, aren't they? But it's still, it's a lot cheaper to charge a car than it is to fill it with petrol. But just pop in more of Catherine's comments on here about P11D forms. So, sorry, where was I? So you, as an employee that owns an electric car and uses that electric car for business purposes, the amount that you can claim in terms of tax relief for business miles only, 45 pence per mile, plus for the first 10,000 miles. And then after that 10,000 miles, it reduces down to 25 pence per mile. But one of the things that not many people know about is the fact that you can also claim an extra 5 pence per mile for passengers. So if you're bringing, if you're driving off on a business trip and you're bringing a passenger with you in the car, you can claim an extra 5 pence per mile. And that's something that a lot of people just don't know about or certainly don't think about.
I didn't know that until you told, in fact, until I watched one of your videos on YouTube. I was like, whoa, no way.
Yeah, well, it's and while it's not an awful lot, actually every penny counts and it is significant, isn't it? It all adds up. But yes, 25p per mile for anything over 10,000 miles. However, if you have, and this is where it gets a little bit complicated, because you'll see that HMRC every single quarter put out their, what's it called? Their I can't remember actually the name of it, but they're basically their mileage allowances. And that is 5 pence per mile for charging. So it's what the employers pay the employees. Let me see, because I've got this written down because Catherine explained it to me really well the other day. So the advisory fuel rates is what HMRC call it. So whenever you're paying mileage for a company car, it's currently 5 pence per mile, and that went up just last quarter. So these are reviewed every quarter in June. So 1st of June have been the last review, and electric cars had been 4 pence per mile up until the 1st of June this year, and it's now 5 pence per mile that you can claim and charge. But again, you can still charge an additional 5 pence per mile for passengers, so that doesn't get reduced down. So if you've got an
So
electric
that's
company
you've doubled
car,
it.
load it up
Yeah.
with colleagues, but obviously it's got to be business trips and business colleagues and so on.
So you couldn't offer a sort of off the record taxi service then?
That might be pushing it.
Yeah, but basically, and that's the beauty, because some people, particularly now we're working from home, will think, oh, we'll all travel separately, but actually it might be better to meet in the office and then all travel down in one car.
Yeah, absolutely. If you're going to a training session or something like that, certainly.
And it's much better for the environment.
Definitely, and we all know that that's one of my bugbears.
Yeah. Right. Okay. So this is a good question, actually. Now we know what benefit in kind is all about. Does benefit in kind for fuel arise if the employee charges their electric car at work?
That is a really good one. And no, it doesn't.
Oh.
So electricity just isn't recognised as fuel for benefit in kind purposes.
Oh, really?
So that bit hasn't caught up with, I suppose, commerciality and technology. The taxation thereof hasn't caught up with it. So it's not recognised as a benefit in kind. So there's no additional benefit in kind charge. So, that's something that I suppose employers need to be aware of. If you've got lots and lots of employees with electric vehicles that are charging them at work, it might be costing you quite a lot, but there's no charge to them. But at least you're not going to have to pay Class 1 national insurance contributions on those as well. So it's just it's a nice benefit that isn't a taxable benefit.
Yeah, and I think it's a good marketing point as well. As if you've got loads of electric car charge points, at work, great marketing to say how
it's a good employee benefit. It's
absolutely.
And it's something that should be considered alongside other benefits.
Yeah. So the next question then: what capital allowances can be claimed by my company when purchasing an electric car? So again, just for my, because I know nothing, but what are capital allowances to begin with?
So capital allowances, basically, you can claim capital allowances whenever you buy assets that you keep and use in your business.
So a physical thing.
Exactly.
Like
they're usually called plant and machinery. So if you're a printer, a printing press, for example. So there are a number of different types of capital allowance, but the ones that tend to apply for cars would be the first year allowance, but there's also an annual investment allowance, and you've just got to be careful about what can or can't be claimed for. So you can't claim annual investment allowance on business cars, but you can claim writing down allowances. So it all gets a little bit complex. And then there are first year allowances which you can claim as well, but essentially it's an accounting term for what you can what you can offset. So the tax options for what you can offset against the costs within the business. So whether it can all be written off for taxable benefit in the first year or over a number of years, versus whether you have to put it in the balance sheet and then depreciate it over a longer time. Does that make any sense?
Yeah, I think so. Yeah.
So for company cars, you've got 100% first year allowances if they are fully electric company cars.
Okay.
And you can also use this for electric charging points as well. So the whole amount can be written down in that first year. So assuming that you've got profits there to absorb that, you can write off all of the allowance against tax. Does that make sense?
Yeah. Okay. Yeah, I think so. Now, Ian's asked a question. I don't know if you can bring it up on the screen, but hi all. If my next company car is either a PHEV or full electric, does the company I work for get some sort of benefit / subsidy? He says, sorry if you've already answered this because he's joining it a bit late.
Okay, so sorry, Ian, what's PH electric vehicle?
Yeah, sure Ian, if you put that in the chat.
Hybrid, are you meaning? And does the company that you work for get some sort of benefit or subsidy? Actually, you've kind of come in at the right time on that, because I suppose the only benefit or subsidy that the company gets would be that they get the corporation tax relief, and they would get some VAT relief. Does that make sense and answer your question?
So I've just Googled it. PHEV is plug-in
plug-in.
hybrid electric vehicles.
Plug-in hybrid.
Yeah. Oh,
Okay.
thanks, Ian. Yeah, beat me to it.
Yeah, both quick. So again, there would be, Catherine, can you just jump in and let me know whether you get full first year, 100% first year allowances on a hybrid as well as fully electric? Because I'm not quite sure about that, but definitely the fully electric is much more tax efficient option, and you would get, as I say, corporation tax relief. You would get 50% VAT relief, or the company will, on that. And but they will, of course, while they get that tax relief, so they get the 20% corporation tax relief, they will have to pay the 15.05% class 1 national insurance contribution on it. So it's a bit of juggling. Yeah. Let me know if that didn't answer your question, or if you've got another question that jumps off the back of that.
So whilst Ian and Catherine are typing, this is a good question actually, because I know a lot of, depending what job you're in, you quite like to sort of change. It makes sense to change, particularly with a lease car, or change your cars on a regular basis. But what happens when the company disposes of an electric car?
Right. And I'm wondering whether Andy from CarSave is on the line, because this is probably going to lead us into some of these benefits of leasing versus, okay, glad that made sense, Ian. Super. Some of the benefits of leasing versus buying. So basically, whenever you buy any asset for the company, it goes into a pool, what's called a pool. And again, maybe we can do something another time on how all of this works. But any proceeds that you get would be allocated against this main pool. So there could actually be some balancing charges that arise. It depends on the values, valuations, and what's been charged. I think one of the things at the minute, and especially with the market the way it is, and cars being so hard to come by, people are actually selling on cars, and especially electric cars, I understand now, for more than they bought them for. So if that happens and you make a profit, then there definitely will be a balancing charge. But yeah, any of those proceeds from that electric car, they don't go to you personally, they go back into that pool. They don't go to, so they get accounted for in that way. And again, I suppose, I don't know whether this question's been asked, but I know I touched on it in one of my videos not so long ago about the pros and cons of buying versus leasing. And at the minute, technology for EVs, I think, is evolving so quickly. I've always been one personally. I've always been a buy your car, own your car. Yeah, I'm not one for cheap years.
Me too.
I'm not so car proud, and I don't do an awful lot of miles. But I know my next car will be an electric car, whatever way it goes, because I do have a little kind of petrol heavy Mazda, which I love, and straight 600.
Don't admit that.
It's really environmentally unfriendly. But I would, if I were going to get an electric car right now, I would lease one, because the technology is evolving so quickly, and and while it is a sunk cost, you still get all of the benefits of getting that and the VAT back, or 50% of the VAT back, and the ongoing costs and all of the servicing. And if things go wrong with an electric car, it's got to be expensive, and you can't, not every garage can fix it. But this is, this is my personal, Ian is employee of the company Electric Car Salary Sacrifice Band. Oh yes, we have heard about that. Sorry, I'll finish what I was saying there, and I'll jump back. I thought you were going to tell me about experience of leasing, Ian, so I'll jump back onto that in 1 second. But I think there are so many positives for leasing at the moment. Not only the fact that the electric cars are hard to come by to buy, and the same benefits, a lot of the benefits we've talked about are only if you buy a brand new electric car. So if you were to buy a second-hand electric car, you don't get all of the same benefits in terms of
that's interesting.
VAT and first year allowances and so on. So you've got to be careful about that as well and weigh that up. So Ian has asked, I'll put this up on the screen, and actually we have come across this just recently, electric car salary sacrifice. So yes, we have heard of this. And again, I'm going to ask Catherine to come in, but I think my understanding is it's still, if it's salary sacrifice, wait a second, because I do have something on this. It's still going to be seen as a benefit to you. But I'll wait while Catherine did lose the feed a few minutes ago. What's she saying there? Most available grants are given to the car dealership and passed on to the customer at purchase. I think that was an answer to your question about Ian, about some sort of benefit or subsidy for the company, so that the grants do tend to get passed on to the dealership and then to the purchaser or the employer through that. But just give me a few minutes and we'll come back to you on the electric car salary sacrifice. I'm making per Catherine type hard and work hard.
We'll let her. I'll ask another question and then we can come back to Ian's one, can't we? When Catherine's finished typing. Can my business recover the VAT on the cost of an electric car?
Oh, do you know, this is a really, really good one. And again, if Andy is on, he'll probably jump in here with me. A lot of people seem to think that a fully electric car means that you should be able to recover 100% of the VAT. They seem to think that it has a completely different rules around VAT, but they don't. The same rules for VAT on company vehicles and on lease of company vehicles, whether it's purchase or lease, applies, which means that you can only recover the VAT if they are not provided for any personal use. So they have to fit that pool car, which means essentially they need to be held on the business property. They can only be used certain amounts of times. And we've seen people try to get around this and make their cars a pool car. But the rules are so strict around it that unless it is genuinely a pool car that is probably branded and sitting there on site for use of any employees all of the time, and yes, people can borrow it occasionally, but it's got to be really, really well policed, and you've got to keep all of the data about who uses it when and what for and so on and so forth. But assuming that they are occasionally used for private use and so on, you can still claim 50% VAT back for electric vehicles, which you can't for in normal circumstances. Let's see what else Catherine said on this one. VAT can be recovered in full on non-leased commercial vehicles, assuming there's no private use. So yeah, whether it's a van or haulage, and so on, you can recover that in full. And of course, you can then recover VAT on an electric vehicle running costs such as repairs and excise duties and so on whenever it applies. Okay. Brilliant. Catherine has come back. Ian, just for you, I'm going to put this one up on the screen. So in terms of salary sacrifice, only certain benefits can be provided by salary sacrifice without any tax implications. And unfortunately, electric cars aren't one of these, so there will still be a benefit in kind. Thank you, Catherine. I was sure that was the case, but you put it so much more eloquently than I could do, and I wouldn't have been able to explain why. So that's really, really helpful. Ian, I hope again that that answers your question. And it's one that we've got to be ever so careful about, because as is natural, people, employers, businesses look for ways to, let's say, reduce their tax liabilities as much as they possibly can. So not to avoid tax or evade tax, but to keep them as low as they possibly can. And that's only sensible. And they also, good employers, they want to they want to look after their employees. They want to provide them with whatever benefits they can in the most tax efficient way as possible. So if they think, you know, they can find a way of getting their employees a car by salary sacrifice, they're probably hoping that that employee won't have a massive charge against them and that it's going to be a real benefit. But no, there will still be that benefit in kind. So Ian, yeah, 2%, if it's a fully electric, it can be more than that. I think you missed a bit in the start whenever we talked about the fact that hybrids will have a P11D, a benefit in kind charge dependent on the carbon emissions or the miles per gallon that you can do on electricity, and it's a sliding scale. So up from about 14%, and then it goes up to a maximum of 37%. So I'd really encourage you, if you're looking at your company car, to make sure you're aware, if it isn't a fully electric car, to make sure that you are completely aware of what the benefit in kind value is and what the benefit in kind percentage is, if that makes sense. And Ian, you're very welcome. Don't apologize for the questions. This is what this is for. It's to make it a bit more interactive, because we can't think of everything that people are going to ask. And it's been great to have you interacting and asking questions. Catherine has just replied to your comment there, which you've probably seen, but honestly, you can get in touch later if there is anything else. I'd be more than happy to answer those questions. Anything else?
I've got one last question. So again, thanks for all the questions, Ian, because the questions are brilliant on live streams. That's the whole point of them. So if you are watching this on catch up, you're not watching it live, put some more questions in the comments, because I'm sure, Sarah, you'd be more than happy to come back and answer those as well.
Yeah, and actually that's something that I'm going to do the bit of promotion here, Bex, that I always forget to do, because we do have a really, really active YouTube channel. And if you do subscribe, and any of the videos on there, ask the questions, because we answer every single question that gets posed. And well, there's only one that I've not answered, but it wasn't really a question, it was a comment where somebody commented in the video and said all taxation is theft. And I thought, really?
You do get some nutters on YouTube.
We do get some nutters. So I just thought, I'm not going to try and answer that. I'm just going to leave that with the tumbleweed that it deserved. But no, aside from really ridiculous questions, we do answer every single question we get. So subscribe, please, and have a look, have a watch, and let me know again if this has been useful. Let me know anything else you'd like to see, because I'm going to do more regular live streams, and I am going to get Catherine live on one sometime soon, because you can see how good she is with these more technical answers. But yeah, we're going to do lots more. So if there are any specific topics you'd like to see, please, put your hands up, give us a shout, let us know what you'd like to see. Sorry.
So I've got the last question then. And I don't know if we've answered this one actually, but I don't think we have. Does a benefit in kind arise if the business provides a vehicle charging point at the employee's home rather than at the office?
That is a good one. So that depends on whether the car is a company car or not. So, if you have an employee who has got themselves their own electric car and you want to do them a favor and get them an electric charging point at home because you're nice and you're looking out for them, so so that would be a benefit in kind. However, if, as for example in Ian's case, if he was getting a company car that is a company car, the employer could put in a vehicle charging point at his home, and that would not be considered a benefit in kind. So there you go, Ian. That's a great question that hopefully helps you out, and you can ask for your electric charging point at home whenever you get the car sorted.
Yeah. Oh well, that's the last of the questions that I've got.
My goodness, I thought this was going to be 15 minutes.
Yeah.
You said it was going to be a 15-minute live, but I think it's been on for nearly 40 minutes now. So thank you for whoever put the questions in advance. Thank you for Catherine for all your help, and Ian for the questions. And I know Linda said hi. I don't know who else has been on, but it's been it's been really Really nice, and not quite as scary as I expected my first live to be, although I did trip over my words and my tax rates a few times, no doubt. But that's why I have Catherine as our fabulous tax manager in accountancy, who keeps us right all of the time. Let me just see. Yeah, I don't think there's anything else. I think any other notes that I had, I think we've covered pretty much.
We've covered it all. I'd just like to say, if you are watching this live, please do give us a thumbs up. And if you're watching on YouTube, please do subscribe to Sarah's channel. I find it really useful. If you're on Facebook, do follow them for lots of tips and advice on anything to do really with accounting. And if you're on LinkedIn as well, watching it on LinkedIn, do connect with Sarah and Catherine, because they've got lots of great advice.
All right.
And what are you covering next? Wait, when's your next one?
Sorry. Yes. At the minute, the plan is, Tony's on there as well. Hi, Tony. Nice to see you.
Tony.
Thanks for saying hello. The plan actually next time is something that's going to be really relevant for you, Tony, because we're going to talk about making tax digital. And actually specifically the upcoming Making Tax Digital for income tax self-assessment, which means for sole traders and for landlords. If you own property, Making Tax Digital is coming your way, and it is a minefield. And if you don't get things right, it will be a right royal pain in the bum, quite frankly. So we're going to talk about Making Tax Digital, really relevant if you own property or if you have any income from sole trade. And it's not coming into place until 2024, but there's a heck of a lot that needs to be done in the interim, and especially if you're a sole trader that has a year end that doesn't fall between the 31st of March and the 5th of April. Really, really important for you to watch and understand the impact of this, because for you, unless you've got a lot of overlap relief, if you fall into that small number of businesses, you'll be seeing your tax bill go up by 20% a year for the next 5 years. Yeah.
Actually, 2024 is not that far away, really. It's only a year and a half, isn't it?
Yeah, it's not. Exactly. And actually the changes in order to prepare for Making Tax Digital come into effect from 2023. So yeah, it's really important. Tony said, Olivia that works with Catherine and the tax team has been doing a great job already of getting him all ready and organised for Making Tax Digital. So that's great. That's good to hear. Thank you. All right, I think that's us. So yeah, as Beck said, do give us a follow, give us a like, subscribe, all of those things, and yeah, and let me know what you'd like to see more of. Thank you very much. Bye for now.
Bye.
Thanks, Bex.
Bye.
Bye.